Welcome to the deep dive. So think about this for a second. What does the future of finance really look like? Especially where, crypto meets the big global markets. Today we're getting into DeFi. And look, this isn't just another crypto project popping up. We're talking about a really strategic player here aiming to connect DeFi, that whole exciting decentralized world, with global capital markets. And AI is right at the heart of it, driving things. Okay, let's unpack this.
Exactly. And what's fascinating here is we're going to look at AIFEEX through a specific lens, like a sharp crypto and financial strategist would. Our goal is to really show you its unique strengths, its pretty ambitious vision, frankly, and what potential it might hold. Whether you're new to this space or, a seasoned investor, we want to give you a clear, comprehensive picture, a critical look, really.
Perfect. That clarity is exactly what we need. So let's start right at the beginning. The foundation. AIFEX's core strategy. How are they actually moving capital from, let's call them older funds, maybe traditional ones, maybe even older crypto setups, into this new AI DeFi thing? It can't be just flipping a switch, right?
No, not at all. It's much more than that. It's a very deliberate, strategic play. They've essentially migrated assets from what they call a legacy fund. You can think of that as maybe their established investment pool, or perhaps an earlier, more conventional crypto fund, and they've moved it directly into a new system built on smart contracts. Now, for anyone less familiar, smart contracts are basically self-running agreements coded onto a blockchain, super transparent, automated. But here's the kicker. Those migrated assets, they get locked in for 365 days, a full year. This isn't just shuffling money around. It's what I'd call a forced refocus of that older capital, the immediate result. A really solid liquidity pool from day one. And it's backed by quite an attractive yield, they're saying, 3 to 3.5% daily.
Wow, okay, 3.5% daily yield is definitely eye-catching. And that forced refocus creates instant stability, I get that. But a whole year locked in, that's a big ask in crypto. Things move so fast. What about liquidity for the people actually putting the money in? Are there trade-offs? How do they handle that concern?
That's a really critical question, and they seem to have anticipated it. This is where their smart Inco unlock mechanism comes in. It's designed to strike a balance, you see. Up to 50%, half of your daily profit gets unlocked right away, instantly, so you get immediate cash flow.
Right.
The other half, it vests over time. It unlocks gradually. You could frame this as a kind of hybrid liquidity model. It balances that need investors have for, getting some cash out now with a built-in reason to stay invested long-term. So while you see regular returns, you're also nudged towards sticking with the ecosystem, which helps keep things stable. It eases some of that risk from the year-long lock-in by giving you consistent, even if partial, access to your earnings.
Right, it's like a psychological nudge almost, giving you a taste of the gains immediately, but making the bigger reward contingent on staying put. But building momentum, getting more people involved. That takes more than just individual rewards. They have this multi-tier VIP system too. How does that fit into the strategy? What's its role in driving growth?
Oh, absolutely. The VIP system is crucial for their growth plan. It's structured in multiple tiers, VIP 1 right up to VIP 9. And this system offers different kinds of rewards. Direct rewards for bringing someone in, indirect rewards from further down the line, even cross-level rewards. It can add up to 20%, they say. What you're seeing here is basically a sophisticated token economy being built. It blends core DeFi ideas like getting yield with really powerful network effects.
Yeah.
The whole design is meant to accelerate adoption, potentially exponentially. For listeners, network effects just mean the platform gets better and more valuable for everyone as more people join and use it, especially this VIP structure. It effectively turns users into advocates, creating this kind of self-feeding growth cycle. Really quite clever strategically.
Okay, so that lays out the strategy, the lock-in for stability, the hybrid unlock for liquidity and retention, and the VIP system for our network growth. But let's dive deeper into the tech and economics. The DeFi space is incredibly crowded. Here's where it gets really interesting. What truly sets AIFEX apart? What makes it different under the hood?
Right, and this is a key differentiator. It boils down to genuine token utility, specifically for their AIFEX token. It's not just a token you stake and forget about. No, it's woven into the very fabric of the platform's operations. So beyond staking, AIFEX is used directly for data training, feeding their AI models. It's used for computing power sharing across the network. And it's used for developer incentives, encouraging people to build on their platform. You could almost think of its structure like an Ethereum layer utility, providing fundamental services others can build on, like Ethereum does. But AIFEX has this sharp focus on AI. The AIFEX token powers very specific AI-related functions, data processing, distributed computing for AI tasks, not just generic smart contracts. This suggests a much deeper, more integrated function compared to many projects where the token feels, well, a bit tacked on or mainly for speculation. AIFEX is designed to be the actual fuel for the AIFEX engine.
Okay, real utility. We hear that phrase a lot in crypto, sometimes maybe too much. Can you give a concrete example? How does using AFX for, say, data training tangibly benefit the system or the holder in a way that's different from other projects claiming utility?
That's a fair point. The difference lies in the direct impact. AIFEX utility isn't just about governance votes or basic staking rewards. It directly influences the performance and the growth potential of the AI itself. So for instance, by holding and potentially using your AIFEX for data training or computing power, you are literally providing the resources that help their AI learn faster, optimize trading strategies better, or calculate yield more effectively. This could, in theory, lead to better overall returns for the entire system, including you as a holder. It's not passive, it's active participation in the core AI function. It creates a value loop that feels much more direct and tangible than just, say, voting on a proposal.
That definitely clarifies the utility aspect, makes it feel more integral. But another massive hurdle for crypto projects is inflation. Tokens get printed, value drops. How is AFEX tackling token supply? What's their plan to avoid that inflationary spiral for AFX holders?
Yeah, inflation is a killer for many projects. AIFEX seems to be taking a very disciplined, almost TradFi-like approach here, which signals maturity. They've stated that their market cap equals FDV, fully diluted valuation. Now, for everyone listening, FDV means the total value if every single possible token was already out there and circulating, even ones locked up or not yet released. By making market cap equal FDV from the start, AIFEX is basically saying, look, this is the total supply, it's all accounted for, no huge hidden stashes waiting to flood the market later. This drastically reduces inflation risk. It avoids that scenario where future token releases dilute the value for early backers. It's a strong anti-inflationary stance designed to build long-term trust and stability in the AFX token's value. Very important for investor confidence.
Okay, so controlled supply, real utility tied to the AI. It sounds like these pieces, plus the reward system we talked about, are meant to work together. You mentioned a snowball effect consensus. Can you break that down? How do the unlock mechanism and the VIP rewards actually create this exponential growth?
Yes, exactly. We connect this to the bigger picture. The snowball effect consensus is really the outcome of combining that hybrid unlock feature with the network-based rewards. Think about it. The instant profit unlock keeps users happy and engaged daily. They don't feel completely trapped by the lock-in. At the same time, the tiered VIP rewards actively encourage them to bring others in to build the community, put those together, and you create this engine designed to rapidly increase the number of token holders. It fuels that network effect we discussed. More users mean more locked capital, which means potentially more stable yields. More users also mean more data for the AI, potentially making it smarter. And a bigger community attracts even more users and developers. It's designed as a positive feedback loop. Growth fuels more growth, like a snowball rolling downhill, getting bigger and faster. It's built right into the mechanics.
That paints a clear picture of how they aim to grow within the crypto world. But you mentioned earlier their ambitions are bigger. So what does this all mean for the broader financial world? How does this internal engine connect to their plans outside of DeFi?
All right, this is where the strategy gets really audacious, potentially game-changing from a financial perspective. They aren't just aiming to be a successful DeFi project. They are making a serious, calculated push to bridge to TradFi traditional finance. And they're doing it through a very bold IPO strategy. AIFEX is actively planning initial public offerings, IPOs, on two major stock exchanges, the Hong Kong Stock Exchange, HKEX, and the NASDAQ in the US. Now, if they pull this off, this would be one of the first cases globally where a DeFi token or the entity behind it gains that kind of recognition and access on public capital markets. The strategic insight here isn't just that they're trying for IPOs. It's how this could force a massive shift in how institutional money views crypto assets. It could challenge the whole regulatory separation between TradFi and DeFi. It's a huge undertaking, obviously, with massive regulatory hurdles, but the potential impact is enormous. It could start to legitimize certain crypto assets in the eyes of the traditional financial system.
IPOs on HKEX and NASDAQ. That is incredibly ambitious. Thinking about our listeners, maybe some are holding AFX or considering it, how do these massive IPO plans actually benefit them directly? How does it build their confidence, practically speaking?
This is where AIFEX shows some real strategic brilliance in aligning holder interests with these major milestones. It's not just abstract. They've tied concrete benefits directly to the ITO events. Here's how. First, upon a successful listing on the HKEX in Hong Kong, they state that all the initially staked capital, that 365-day locked-in amount, matures and is returned immediately. That provides a very clear, potentially lucrative exit point for those early participants, validated by a major stock exchange listing. It significantly de-risks that long lock-in. Second, upon a successful listing on NASDAQ, they say all pending rewards are unlocked, so any of those vested earnings that haven't fully unlocked yet become instantly available. This structure effectively ties the confidence of token holders to major global events in the regulated stock market. It gives people tangible, high-value goals to look forward to, moving beyond just crypto internal milestones.
So it's not just a vague promise of future value, it's a roadmap with really significant financial triggers for the token holders, tied to traditional market validation.
Okay, zooming out again. What's the ultimate vision here? How does AIFEEX see itself fitting into the future of finance?
This raises an important question. What is the end game? Their macro-level vision, as they present it, is to become an AI financial institution. An institution that seamlessly connects the on-chain world, the DeFi protocols, the AI-powered staking, the token economy on the blockchain with the off-chain world. And that off-chain world includes the IPOs, navigating regulations, maintaining transparency expected of public companies. It's trying to create this unified whole. You could almost think of it as a hybrid structure. Maybe imagine combining the agility and crypto-native aspects of a Binance with the institutional scale and regulatory footing of a BlackRock. But, and this is key, with AI driving the core intelligence and operations, it's about bridging that gap, creating something new that leverages the best of both worlds, powered by AI. That comparison, Binance plus BlackRock with AI at the core, certainly highlights the ambition. Let's bring it home, though. To make this vision work long-term, how critical is the AI component? Is it just clever marketing? Or is it truly the engine? What does the AI actually do day to day?
No, the AI appears absolutely central, not just window dressing. It's positioned as a fundamental protocol driver. Think of it like this. AI algorithms could be constantly analyzing market data to optimize where the funds are allocated for yield generation, or maybe dynamically adjusting the unlock percentages based on liquidity needs and market volatility to keep things stable. It could potentially predict optimal times for certain trades or reward distributions. It's the intelligence layer that's supposed to make the entire system smarter, more efficient, and more adaptive. So it's not just a buzzword. It's intended to be the core mechanism for optimizing funds, managing the reward unlocks, and distributing that yield effectively.
Okay, so AI as the active brain. Now, the crypto space has seen plenty of projects with big promises that, well, fizzled out. How does AIFEX try to position itself as different, as more substantial, maybe like a DeFi 3.0?
Yes, they definitely seem to be aiming for that DeFi 3.0 label, signaling a move beyond earlier phases. They're trying hard not to be perceived as selling empty dreams, which unfortunately happened a lot with early ICOs that often had little more than a white paper. Instead, the focus is on tokenomics tied to real business, that AIFEX utility we discussed, linked to the AI operations, and crucially, that very clear public roadmap towards regulated capital markets via the IPOs. It's just a focus on building tangible value, seeking regulatory legitimacy, and offering concrete milestones, which represents a step up in maturity compared to many earlier, more speculative crypto ventures. It's about substance. And look, if they actually manage to execute this whole strategy, the AI integration, the tokenomics, the dual IPOs, then AIFEX wouldn't just be another DeFi coin lost in the noise. It could potentially pioneer a new asset class. An asset class that's rooted in DeFi and AI, but is accessible and understandable, perhaps even attractive, to both everyday retail investors and the big institutional players globally. That's the ultimate prize they seem to be aiming for.
So what does this all mean? Well, what we've really dug into today suggests AIFEX is trying to be much more than a simple crypto platform. It looks like a meticulously planned strategic effort to build a bridge. A potentially crucial bridge between the innovative, sometimes wild world of DeFi and the established structures of global finance. And they're banking on AI to be the supercharger, the exponential engine for growth across that bridge. It's ambitious, yes, but the detailed playbook they've laid out certainly aims to rewrite how these financial worlds interact.
And maybe the final thought to leave you with is this. Consider what a model like this, if successful, could mean for how we all perceive cryptocurrencies. Could it fundamentally change their role, transforming them from niche digital assets into primary financial instruments integrated into the global marketplace? What does that possibility mean for the future shape of your investment portfolio? How do you start evaluating assets when the lines blur like this? It's a potential paradigm shift worth thinking about.
Absolutely. It really forces a rethink of what an asset even is and how fast that traditional versus decentralized line is dissolving. A project like this definitely challenges assumptions. If it succeeds, it could genuinely reshape investment landscapes for years to come. Thank you for joining us on this deep dive. We really encourage you to keep thinking about these kinds of ventures and what they imply for the future of finance and for your own understanding of these rapidly emerging asset classes.